So thanks everyone for joining. This is our Fraud Protections 2024 webinar. So we're here today. We're going to be sharing with you new data and insights about prevailing fraud trends, some strategies for identifying emerging fraud tactics, and then some expert advice for continually outsmarting fraudsters. So if all goes well today, you'll be walking away from this session with some strategies for recognizing and reacting to these emerging tactics, some education about today's must-know fraud tactics and trends, and as well as some advice from our experts here and some ideas for preparing your risk strategy into the new year. So we'll get kicked off with some introductions here. So maybe Maria, you'd like to go first, and then Michael, and then I'll introduce myself too.
Thank you, Andy. Good day, everyone. I'm Maria. I'm currently Senior Threat Intelligence Manager at BILL. My role is focused on detecting and investigating complex fraud cases across our enterprise. BILL is a financial operations platform, so we offer receivables, payables, and spend and expense solutions to small and medium businesses, and we see a variety of different techniques and tactics prevail. And so myself and my team are really focused on uncovering the root causes, deep diving and figuring out what it is the actors are doing differently, and making scalable recommendations into our strategies that can help inform ongoing detection. Prior to BILL, I spent some time at Meta focusing on investigations into abuse at scale, including inauthentic behavior and scams. And prior to that, I spent a couple of years at local government law enforcement agencies. So happy to be joining this conversation today. Thank you. Over to Michael.
Thanks, Maria. Michael, I'm Kumar with BHG Financial. I oversee the fraud management team. Our team is primarily focused on new account fraud, as our employer operates in the direct lending space for consumer and commercial loans. Previously, I worked with other small lenders, including On Deck Capital, also in the technology space in AWS, as well as a prepaid card vendor as well. Primarily, my role and duties encompass training, education, oversight of our existing models and systems, finding new emerging trends across our customer base, and ensuring that our team of investigators are well equipped to status those accounts, to coordinate with our customer facing teams, to identify good and bad customers, and trying to get them to create deterrence points for our products, and ultimately try to clamp down on it as early as possible.
Awesome, thank you both. And then finally, I'm Andy Bernard. I'm a senior product manager for the fraud team at Inscribe. If you've not heard of us, we're the leading AI-powered risk intelligence solution that helps you identify trustworthy and creditworthy customers. And before I joined Inscribe, I was also a product manager for financial crime compliance at checkout.com. And before that was working as a product manager in a kind of fraud-related role at the Expedia Group. And we're all very excited to be on this webinar with you today. So we'll get kicked off now then. So my first question for the panel then, so thinking about heading into 2024, I would love to start with discussing some of the emerging fraud threats that we're seeing now. So maybe what's interesting or concerning, or even a trend that you've experienced or read about recently. Perhaps Maria, you could kick us off with this one.
Sure. So I think the first one I would highlight is related to card compromise. Card compromise is always an issue for any issuer. We're seeing a lot more creativity where the fraudsters previously, when they purchase card data from the dark web, when they have partial information, it's maybe not as entirely as useful as when they have full information. But now they're making use of this partial information by combining it with social engineering. So they have some information about the card, where it may have been used for fraud. And so they contact the individual and say, hey, we're from the fraud department of your company. Can you tell us the last X digits of your card? Your last fraudulent transaction was at this place and this time. And the person whose card, is involved, they're aware of this. So of course they start kind of building that trust. And so what we're seeing is just kind of like combination and creativity of using kind of partial information that's available that they can purchase much cheaper than kind of the full package, and then the additional information that they can glean from contacting and social engineering individuals by having this information. So it's quite scary, actually. The other one I would want to highlight is also more use of compromised emails, whereas previously compromised emails were generally used just for BC to kind of divert funds that were divert and intercept funds that were intended to be sent between two parties. Now they're using these compromised emails to dig through the inbox, identify what's in it, and use that information to actually impersonate the business and sign up. And oftentimes there's a lot of really great information that they can dig up on the email. Sometimes people exchange their IDs, their banking statements, etc. And so they're making better use of these things that they previously have only used for like one specific purpose. So that's actually evolving, and we're seeing more and more of it.
Thank you. Really interesting to hear. Before handing over to you, Michael, what I should have said at the top of the webinar here is we'd love to hear your questions on everything that we're talking about today. So we're going to have a dedicated Q&A section at the end. Nothing to stop you throwing your questions in now as you think of them, though. And if we see any questions that are super relevant to what we're talking about now, we may take some time out to talk to them now. Otherwise, we'll try and get through as many of those as we can at the end of the session and follow up with some afterwards as well. So Michael, what's on your mind at the moment?
So in a similar vein to Maria, there are two that really have been very prominent kind of attack vectors for our business over the last couple of years that we've seen, and they kind of fluctuate over time, but in particular, most recently is going to be pig butchering scams. So in particular, for those who are unaware of this, this is primarily based in kind of the same patterns as you would in traditional romance scams. Individuals who are highly skilled professionals, well-off earners, are being targeted on social media by various fraudsters or networks that are trying to gain their trust and offering the promise of hefty returns in the crypto space. Necessarily, a lot of times they will, convince them that in order to gain access to this, take out an additional loan, gain access to additional credit that we can pass through and offer you immediate returns on crypto, either in localized spaces or even international markets. And in particular, that's very hard for traditional systems to identify, because much in the same way of first-party fraud, these are true individuals. The profiles come in, they look ideal, particularly from a credit underwriting standpoint. These are your preferred clients, right? They have extensive backgrounds, histories, or otherwise that your legacy systems may not be able to identify. So it's important to try to look down into the secondary and tertiary levels of the profile of the account information, utilize systems that are identifying velocity, or additionally look for similar patterns of how applications are coming in, urgency that may be disclosed as they're interacting with your customer-facing teams that can be consistent, right? Information that they might disclose that necessarily is consistent with other accounts that you've so far identified as being victims of this process. Because really what it comes down to is essentially it's kind of displays itself in the same way that you might see credit muling, right? Because they're being coached in terms of how to get through this. They're not going to immediately be willing to say, oh yes, I'm doing this because I want to use your funds to invest in crypto. But they might say it's for reasons that do not align with their profile, right? So that's an important one that we've been seeing at a higher rate, particularly over the last few months, exceptionally spikes across the last year or so. And then in the same vein is true first-party fraud. I think that is going to be an ongoing pattern of attack or a place in which anyone in the fraud risk space needs to be aware of, because it's outside of the sexier, more exciting vectors of synthetic identities and true ID theft. And we lose sight of that, particularly in results of the struggles of the economy right now, the urgency or uncertainty that people are feeling. It's easier to rationalize making little changes to documentation to gain access to credit in my space, where people are feeling like they have to make those minor changes, and it's okay because I'm still working at that employer, but I just need to make my profile look a little bit better, right? I've had a hard time with my credit recently, so I'm going to potentially try to dispute credit lines incorrectly that did actually go bad on, right? Working with Inscribe in particular is hugely advantageous for us because you're going to see instances where they're using sometimes templates, but also existing documents, existing pay stubs to make changes to them to make it look like they are a stronger candidate. And a tool that is actually able to go into the authenticity of the document and track those changes is monumental for us. So that's really kind of a centralized focus for us.
Cool. Thanks, Michael. Appreciate that, and certainly seeing some similar themes there. On my side, just wanted to start with some kind of scary statistics about the state of the economy at the moment. So America's total credit card debt has exceeded $1 trillion for the first time. Auto loan delinquencies have risen past pre-COVID levels. We're seeing more people tapping into their 401k accounts, presumably because of financial distress, and we have household debt at an all-time high as well. Not to mention interest rates also being at a 22-year high. And you can't afford to ignore these macro factors when you're thinking about fraud. When the economy suffers, you're going to see fraud thrive. And this isn't necessarily the outright fraudsters you might be thinking of. As Michael was talking about the pig butchering there, it's a very similar concept here. We've got people here using their own identities, applying for credit, potentially with every intention to try and pay this back. But given the state of their finances and the economy, potentially they're having to manipulate some of their details to be eligible for those. And so we'll see them manipulating details on their bank statements or their pay stubs to try and be eligible for higher credit limits. And we can see some of that on this slide that I'm sharing here with this pie chart. This is actually taken from Inscribe's 2023 document fraud report. We found that in 42% of cases of all the fraudulent documents that we looked at during that were received during the underwriting process of our customers, there were manipulations made to details like bank balances or transaction amounts or transaction descriptions, but absolutely no manipulation to identity. And what can be quite worrying here is that in most cases, that kind of fraud can go completely undetected. And that's because because 90% of these kind of alterations are just invisible to the human eye. Like a human just can't see them. And this sort of thing's only going to get worse as the economy continues to suffer. And this is exactly why we built Inscribe, actually, because we built our risk intelligence platform. And as Michael was talking about there as well, we can show our customers exactly where these alterations were made on the document, because what you don't want is to receive a bank statement or a pay stub that's been manipulated, and then that goes on to be your source of truth for making your underwriting decisions. The risk here being that if you don't have this kind of technology solution to check that kind of thing, you're just teeing yourselves up for credit losses and defaults further down the line. Question for our panel here. How are we staying on top of these emerging fraud tactics? Kind of what tips would we give for how to keep up with evolving fraud trends? And maybe, Michael, you'd like to kick us off this time.
Yeah, no, Andy, that's a great call out. And I think, necessarily I want to frame my answer in relation to actually the most recent poll question, because I think it's important to recognize that your existing controls that you're implementing may necessarily adjust how bad actors are attacking your systems, right? So if your fraud risk program currently doesn't implement an internal fraud strategy or data-focused team, it's an incredibly important thing, because we necessarily have to approach our structuring in the same way that we approach individual investigations. We have to look into the details. We have to identify those patterns, necessarily understand controls and new systems that we implement will cause changes in attack vectors, will result in different behaviors, will encourage certain actions as a result, right? So the biggest thing is understanding the scope and the environment and the customer base that you're presently working with, but also stay in tune with other leaders in the industry, right? Keep scouring online blogs, individuals who are sharing information, they're sharing their experiences across larger industries. Also look to build partnerships and relationships with emerging vendors that are really trying to identify and respond in real time to those new and emerging trends, right? We all want to rely on the legacy systems that we have a lot of faith in and trust, that we've been working with for years. Those are always important to establish kind of the foundation of your investigative teams, your analytics, so on and so forth. But it's necessary to continue to build those layers on top in order to have the flexibility in order to respond as these trends start to emerge. So it's a really important thing to look back and be retrospective, understand what's unique for your immediate kind of environment, and then keep an eye out for what else might be coming down the line.
Awesome stuff. What would you add to that, Maria?
So I actually completely agree with Michael. Continuously learning from what is coming to your platform. We found it extremely valuable whenever our automated systems are not able to label entity as it should, whenever there are positive signals outweighing the negative, but it actually ends up being a fraudulent entity. We deep dive and figure out, well, how did they circumvent our controls? What did they do differently? Did they use some sort of really good proxy that has a great reputation and as a result impacted kind of the weighting in our logic and decisions? Or was it some completely new pattern that our system wasn't even trained upon? And so it's really important to understand, like, what are the techniques and tactics that these actors are using, what kind of infrastructure they're using, and learning from what you see. And then the second part to that I would add on is collaborating with industry peers and finding counterparties at other financial institutions that are also seeing something similar, or even learning, like, is someone else seeing this? Where we're starting to see this, is somebody else seeing this? How are you dealing with it? We found it extremely valuable in reaching out, making those connections. There's groups. I would say something we found very useful is joining the FSISAC, the Financial Services Information Sharing Center, that has members from different financial institutions across the country and across the globe, and they all are on a common mission to eliminate and exchange intelligence about fraud. So they seldomly target one financial institution, as we all know. And so it's more important than ever, I think, for us to be coming together and learning from each other. And I think now there's so many more opportunities there were a few years back, I would say. So I think that's really key.
Yeah, I love that. I love that focus on collaboration. I think that's so important. On my side, I'd love to double click on something that Michael mentioned right at the top of the question, talking about social media and such. A really interesting line of thought to employ is, can you put your fraudster thinking cap on and go where these fraudsters are going to collaborate? So we've seen fraudsters more active on social media platforms like Telegram and Reddit. And so it's making it even easier for fraudsters to collaborate. You can go on and you'll see countless examples of people sharing strategies for either forging or purchasing fake documents that they can then use to either apply for credit cards or loans or apply for rentals. I've actually got a few examples to share with you today. On the left hand, I appreciate this will be a little bit small. I think we have the full version in one of our reports, but we have someone here on Reddit that's literally being coached step by step through how to manipulate their bank statement and to make it look better than it is. And over on the right-hand side, we've taken an example from Telegram as well. And this comes from just last month in October. AmFirst Bank upgraded their online banking portal, and they made this announcement to their customers that it's going to be happening over a weekend. And fraudsters naturally see an opportunity there. They can kind of hazard a guess that perhaps the service is going to be unavailable to AmFirst customers over the weekend. And so we can actually see a kind of call to action for between fraudsters to see who's got some compromised AmFirst credentials that they may be waiting to use and sort of ready to spring at this opportune moment. And so clearly this is an example of a very coordinated attack, making use of these social media tools. Kind of also in the vein of fraud trends developing like this, we just had one other trend to show is maybe not the most impactful trend to share, but highlights this evolution, which is that fraudsters apparently prefer to work on Wednesdays. We saw that most of the fraudulent documents that we received were on Wednesdays, followed by Tuesdays and Thursdays, and they're taking the weekend off. And the reason I mention this is that when we last looked into this, actually Sunday was the most popular day. And so you see, it's quite interesting to look at these trends and try and put yourself into the minds of fraudsters. And then I would really, just as a final thing, really support what Maria was saying about collaboration. And there's a ton of great resources out there to take advantage of. I think we're all fans here of Frank McKenna and his Frank on Fraud blog post, which also brought us this AmFirst story. And of course, we're here in collaboration with About Fraud as well. And About Fraud is a super rich trove of information for any anti-fraud professionals. And there's tons, like look through podcasts. There's one that I quite like that I'll listen to when I'm cooking or over the weekend, when I'm kind of less in work mode because it's a bit lighthearted. One I very much like called Smashing Security, which is not specifically about the fintech industry, but it's about security and technology in general. And sometimes you'll listen to one of these stories and you can see it as a cautionary tale, and you can think about how it might translate into our own industries.
And Maria, I think there was a request to repeat the name of the group that you mentioned that you've been coordinating with other industry leaders.
It's called FSISAC, Financial Services Information Sharing Center. It's a member-based consortium. Any financial institution is able to join, and it's based on tiers. There's an annual membership fee, and it gives you access to a lot of intelligence, but also access to other fraud professionals across various institutions. It's a great resource.
Right then, we'll move on now for exactly that, thinking about how we're going to prepare our risk strategy for 2024. And as it's all the buzz right now, I think we're going to have to talk about how artificial intelligence can be used here, perhaps to help identify these new and emerging trends that we're talking about and minimize fraud and credit losses. I'll kick it over to you first, Michael, if you have any thoughts on this.
Those partnerships are incredibly important, right? Because they necessarily supplement the individual intelligence that we try to garner within our existing investigation teams. So partnering with systems that help to supplement that, to help to support and allow for scalability is incredibly important. Just for our usage, Inscribe has allowed us to stay very lean or very small and tightly knit team of investigative units. And it allows us to immediately identify aspects of a manipulated document that otherwise relies on years of experience or years of familiarity with that specific industry or specific institution whether it be a specific payroll provider, larger bank, so on and so forth. You have to have that prior experience, whereas a tool such as Inscribe or other ones that are implementing AI systems to identify those changes, those alterations, you help to close up that gap so significantly, right? So it's one of those aspects that has helped us to stay as much as we can ahead of the curve. We all know that fraudsters kind of dictate our approaches, and we have to react to them. So coordinating with systems that are using cutting edge technology to try to supplement our existing knowledge of those trends and those attack vectors is hugely important for us.
Perfect. Thanks, Michael. Maria, what are your thoughts?
I think that for preparing for what is coming ahead, I think it's really important to understand where you are and having a good baseline of where your controls, your systems, your automated detection may be having some weak points, and having areas where maybe in your product it's more susceptible, what's being more targeted, so that you know where to invest. And I think fraudster strategies adapt really quickly. And so being able to have a technology that's nimble and can react as necessary at, a press of a button, and I have to wait for a number of days for a control to be implemented, I think is also really crucial, because those few days can amount to significant losses. I think another point to highlight is a constant need to ensure that the frontline teams are aware of what's coming in, equipping them with the right tools. I think that, document manipulation is a really good example of something that is humanly prone to error. But also this is where kind of the AI is coming in and making it a lot even harder to detect both kind of the selfies and, images that are being generated. It's really getting more and more advanced. And so having the team be equipped with the information and the tools that can counter that incoming pressures, I think it's just becoming more and more crucial. And that investment trade-off, it really needs to be highlighted, because otherwise, unfortunately, the teams may end up being behind. And that's, of course, not the place where we want to be. So.
I really couldn't agree more with every single thing that the rest of the panel has just said there. So thank you for sharing, and I'm just literally going to reinforce that. Fraud and credit losses both have been growing over the past 20 years, and that's despite the fact that so have the operations teams who are in place to try and fight this. And this is because many of the data sources that the people in those operational teams are using to try and establish trust or creditworthiness of their applicants can be easily manipulated, like we've highlighted a few times there. We've talked about fraudsters using Photoshop and sharing forgery techniques, buying and selling fake documents, and even using generative AI now as well. And so the ability to commit fraud is just getting more and more sophisticated, and it's becoming impossible for human review teams alone to spot that fraud in documents. That they need to do that to make the right lending decisions. But this is exactly as Maria was saying here. This is where machine learning models can come in and help with network effects. And the more data they ingest, the smarter they're going to get and can remember millions of data points. So, for example, if you think about a manual reviewer looking at a bank statement, they're looking at that, but they're unlikely to recognize if maybe 6 months ago they received a statement with the exact same 100 transactions on the same dates with the same transaction descriptions for the same amounts. That might not register with them, but a computer sure will notice that. And at Inscribe, this is how we've always thought. We've considered AI-powered fraud detection as part of our DNA, and we created the doc fraud detection category to serve this need. And we've been doing this for the past half a decade. And so our network effects are really quite powerful now, because we spent that time just taking in more and more bank statements, pay stubs, utility bills. And so you can think of us as like a super seasoned technology fraud detector, and because of the way we're taking in all these documents from all our different customers, we can quite quickly adapt to new threats, and we can provide the results for each document as to whether we think they're trustworthy or not in just a few seconds. I want to make sure that we have time for Q&A at the end, but we've covered so much ground here. I really kind of want to get every last nugget of wisdom I can out of the panel today. So yeah, before we get to the Q&A, just any last bits of advice for today's attendees? Maybe from yourself first, Maria.
Sure. I would just highlight that risk teams oftentimes we're viewed as inhibitors of growth, right? Because we're trying to prevent fraud from happening. But it's important to change that narrative, and I think there's a lot of opportunity we have by partnering with marketing and sales team, so we could walk along the same path. So you will, like, essentially, knowing about where are we going to be targeting our particular campaigns and kind of when, and being able to prepare for that so that we can help open up the funnel, help our companies grow, and position ourselves as enablers of growth, enablers of safe, scalable growth. And it really starts with collaborating and sharing, like, not necessarily like the control, like what is the secret sauce that you're using to catch fraud, but what can happen, kind of sharing that knowledge within the organization, within the team, so that everyone can be aware and be there to flag something that goes amiss. Oftentimes, our sales team is going to be the first one to be reaching out to make a phone call or to be on a Zoom call, and they should know what they should be looking for. And I think that's, breaking these silos that can help us get to more successful narrative that can also, help us with securing resources and ensure that our organizations are well equipped and well aware of, what we're up against.
Cool. That's great to hear. Michael, yourself?
Yeah, I would actually fully agree with Maria on that point. I think it's incredibly important that we don't insulate ourselves too much from the customer-facing side of departments or organizations, because they really are the kind of the first point of contact, and can fill in the gaps that systems are not able to account for. Communication, behaviors, patterns, information that ultimately doesn't stand out. As long as we can educate and work concurrently with those teams, it puts you in such a better place. You avoid that combativeness that can sometimes emerge and develop over time, as there's a perception that those two departments or those two sides of the equation are operating or working in different directions. But it really is necessary to be in support of each other. As well. And another thing for me is never rest on your laurels. Don't let your systems, don't let your controls stagnate, right? Look back to what you've previously implemented, reevaluate and optimize your existing thresholds, understand what is possible and what is more prominent going forward for new, like I said before, new attack vectors that are being implemented based on the systems that you have found success in, right? They're using that. Bad actors, fraudsters, decentralized rings that we're seeing now are constantly evaluating what is and isn't successful. They do as much of an ROI analysis as we do as professionals. So they will adjust, and it is cyclical. One of the things we've seen over the last month or so are starting to see documents and patterns that we saw 2 years ago. And that's simply because, as Andy pointed to, the reliance on social media. Right, so they'll go to maybe find an older Reddit page or some other older conversation on Telegram that's saying, hey, we had success at this company by employing these tactics. So they're going to try to see if that's still successful, right? So it's keeping aware of what has served you well or where you have taken losses in the past, trying to build controls for that, but also recognizing that may ultimately end up opening you up to additional threats or weaknesses going forward as well, and always trying to stay cognizant of that so that you can be flexible and dynamic going forward.
Super. Really glad we took the time to for this final round of discussion, because this is brilliant, and I couldn't agree more with both of you. Maria, right at the top there, you said like there's this unfortunate tendency sometimes that risk teams can be seen as an inhibitor to progress, but as we know, the complete opposite of truth. Fraud is the inhibitor of progress. Fraud leads to losses for the kind of companies that we work for, but the cost gets passed down to end consumers as well, and this is something that we're deeply unhappy about at Inscribe. And because fraudsters constantly evolve their techniques with, for all of the examples that we've talked about, the solution to fight fraud is actually pretty complex, and more it's requiring the need to use these really innovative machine learning models. And to quote Michael there, don't rest on your laurels. It's not a one and done exercise. It's not a case of this is how fraud works. This is what you need to defend against. It's a game of cat and mouse. The fraudsters are constantly evolving. And so, yeah, we touched a little bit earlier about kind of this previous view of the world where fraud is increasing. We need to increase our headcount to try and tackle that. But we kind of view that as the old world. Really, the new world, we would say, is going to be enabled by machine learning. We need those risk and ops teams are critical, of course, and we need them to spend their time on what they're actually best at. The winning companies are going to be the ones that embrace AI to help make faster, fairer, and data-driven approval decisions, and that's going to benefit their bottom line and their customers as well. And this is exactly what we're working on here at Inscribe, as I talked to previously, is making sure that machine learning is at the heart of fraud detection and leveraging that technology to make sure that we're winning in that game of cat and mouse with our fraudsters. Well, thank you both, Maria and Michael. I've learned a ton from speaking with you guys, and I hope everyone in the audience has too. We've still got 15 minutes to go through some Q&A, which is excellent. So if you've not had the opportunity to ask questions yet, please continue to drop them in. I'll start to pick out a few that we've had through the session here. What third-party solutions exist to determine authenticity of documents? I'll be a little bit biased here and talk about Inscribe, as it's the company I work for, and I can talk very confidently to our capabilities. And happy to connect outside of this forum as well, and you can check out our website. But for several years now, we've been working with a host of fintechs and financial institutions and all kinds of companies, really. Anyone that is relying on using documents as some kind of source of truth for making important decisions that will have financial penalty if it goes wrong. And if you remember back, I know we couldn't see them super clearly, but the two fraudulent documents there are kind of highlighting where those invisible alterations have been made. We help our customers look at their documents and start to flag those. And kind of thinking about the machine learning that we've talked about a few times here, because we're looking at because we're looking at both legitimate documents and forgeries from a whole host of companies across the US. And we've been doing this for some time now. Like, our models really know what they're looking for. And so, we can start to flag up some of these things that are just going to be invisible to the human eye. But of course, I'll open up to the panel as well for any other thoughts on that question.
Yeah, I would echo those sentiments. I've had the pleasure of working with the team at Inscribe for about 4 years now, and watching the system and the functionalities evolve and improve over several years, and just in the last 2 last few months. Andy and I had a chance to sync up even just yesterday, where his team was presenting new features that align directly with what our team is looking for in terms of increased capabilities, increased feedback, both from the Inscribe team to us and vice versa, which goes a long way in terms of constantly creating new understandings and new capabilities over longer periods of time. Is hugely valuable for us. Those types of partnerships and collaboration are really what allows us to try to come up to the same level of coordination that bad actors and fraudsters are able to implement, that I think a lot of financial institutions have been limited on in the past.
Cool. Super. Thanks for sharing that. It's appreciated. We've got another question there, I guess, related to Inscribe as well, whether we're limited to just documents or whether altered checks is something we think about. I love that question because that's coming up an awful lot now. I don't have stats to hand, but check fraud in the US now is just reaching kind of dizzying heights. I think it's interesting to think about what we mean by check fraud. We did some research into this, and really there's maybe several kinds of different things that we need that we're thinking about in terms of check fraud, like physically manipulating checks to change the details versus attempts to forge identity on voided checks. We do have several customers actually that are working with us with some of these use cases. I'm giving an indirect answer here because it does vary quite a bit depending on what you're looking for support with. But I think either way, we'd love to have a chat, and more than likely that's something we could lend a hand with for sure. I've also got a question here. I love these fact-checking some of the statistics we've used in the presentation here. I quite boldly used a 90% stat early on there when I said, I think it was in the first section anyway, where I said 90% of document fraud is invisible to the human eye. So thank you for calling me out on that. That is a real stat. That's a stat that we've put together at Inscribe. So that's based on all of the documents that we've been looking at over the time we've been operating. Maybe this is one more. I maybe hogging the mic a little bit here and answering these questions. So Maria and Michael would love to get your thoughts on this one. If you had one final piece of advice for firms combating fraud, I think we've got to credit losses specifically there, what would it be?
Sorry, you mentioned
Maria,
credit.
I'll let you take that first if you want to.
Sure. I just wanted to clarify. Was it credit losses?
Yes, I think fraud leading to credit losses. Sorry.
Yeah. So I think agility. Something that we notice is just in our spend and expense portfolios example, techniques and the kind of variety of the fraud attempts that we see is changing like daily. And so they try different manipulation techniques. They try kind of packaging data together in different ways to ensure that they have the whole kind of complete package. So carefully looking at what it is that makes it stand out, looking at device attributes, behavioral attributes, the speed through which the application is completed, and how quickly they try to start spending. I think all of these in combination, along with how the information was entered, what information was provided, and we're in an environment where we can't go to the business and see, is it really there? Is it really standing? But nowadays, it's a lot of information that could be gathered publicly, and some of these things can be automated, like being able to check, well, how many reviews does business have? How recent was the review? They just only have a business registration, just kind of shell company, really nothing there. Some of these things can be automated. Some of them do require manual digging, but a lot of it is something that we can, have scripts. And there's technology out there that can be utilized to bring it all together. But again, just anchoring the fact of agility of being able to quickly adapt to what's changing, and having your control set up in a way where you have the control. You don't have to rely on anytime you want to make a change. You have to go and work with an engineering team to build this out from the ground up. It takes a lot of effort. And so investing in that agility early on, it's very crucial. Michael?
Yeah, I would definitely agree with that. Sorry, go ahead, Andy.
Sorry, Michael. I just seen there's a slight follow-up question in the chat now. Maybe you could frame your answer around this, because I know you talked about first-party fraud specifically earlier as something you're seeing more and more now at BHG. Just the question there is, what are the best practices specifically for mitigating first-party fraud now?
Yeah, no, that actually ties in directly to what I was going to touch on as well. Is understand where you might need to adjust the structure of your existing risk teams and look to coordinate with possibly your credit-based teams, your true credit review teams, to create hybrid teams of both that marry both fraud and credit review, because you will see a blending of the certain behaviors and patterns that exist on individuals who are going to be creating falsified documents, right? That we can pass through systems such as Inscribe to identify those, but also ones who their, like I said, behaviors and patterns leading up can show that they are coming to you with the direct intent of not being able to repay or knowingly never repaying, right? We have instances of loan kiting, bust out fraud, strategic default, all of those aspects. You're necessarily going to see that, hopefully, or ideally, we want to try to identify simple patterns and behaviors leading up to your application, right? So you're looking at inquiry volume, you're looking into their bank statements to see if they are applying at other lenders or have received recent funding over a short period of time. Are they transferring out to other accounts? Are they moving it into crypto? High risk instruments as well that you can take away information in regards to that. And like I said before, it's important to understand your default rates, your credit losses that exist outside of your present fraud controls, to identify where you can adjust your defenses, create deterrence factors that may cut down on that volume. I think one of the aspects for us is always looking at that component as well, of we may not always be able to confirm the bad actors. We may not be able to identify them, but we can make it a more difficult and uninviting environment for them, to where they don't look at you as an easy target, that they don't think of you as what is sometimes called as a fraud magnet, something that has that low entry point or ease of access to get in and really take advantage of your existing system. So it's really important in that regard to create controls around higher risk populations, and understand where you can implement additional due diligence or additional checks to kind of cut down on that and give a better degree of confidence in individuals that you are partnering with from the customer side.
Great answer. Thanks, Michael. We're coming up on time now. I think we got most of the questions in the chat, actually, from the public and some of the DM'd ones there. So just one more resource that I was keen to share before we wrap up. I referenced this a couple of times for my tool tracks, and this is something that a lot of our stats came from. This is Inscribe's 2023 document fraud report. Just looking for the website there. You can find this on inscribe.ai/trends, and this has got like a whole wealth of information in there that you might find helpful, and that expands on some of the topics that we've been talking about today. If there were any questions, I'll go back through there afterwards and just double check. But any other questions we didn't get to, we'll follow up offline. And if anything kind of comes to you through the day that you wish you'd asked in this session, then feel free to reach out. But otherwise, I think we can leave it there. Massive thank you, both Maria and Michael. Everything you've shared today has been so insightful. I know I'm coming away having learned an absolute ton there. So I'm sure I'm not the only one that's going to be taking this into my risk planning for next year.
I really appreciate the time.
Likewise. Thank you, Andy.
Likewise. And thank you, everybody that's attended. It's been great having you here. Hope to be in touch soon. See you again.
Take care.
Take care.
Bye.